All right, well, welcome everyone to our received market update on March 31st. Yes, I am saying March 31st. It seems like this month has gone on forever. I just want to welcome to the guys that I'm sitting here with. First off, we're going to introduce Shawn Todd.
Hey, everyone.
Looking good, Shawn Todd, by the way. Next, I'll introduce Corey Butler.
Good afternoon, everybody.
Corey, how are we doing today?
Great.
Also looking sharp, and in the sharpest dressed person here, Brian P. Adams. How are we doing today?
Wonderful. Thanks, man.
No, you look wonderful, so I just wanted everyone to know. Shawn, I'm going to ask you the first question. You sent us a great video by Jason Watt about the mortgage deferral program. Do you think people should or should not defer their mortgage payments?
That's a great question, Ben. I think it's going to come down to your personal situation. There's going to be people right now who are really needing some reprieve from payments. So if you're in a position where this is a make or break it and you can't afford it, then I definitely would agree. Deferring that payment is really important. We have to have really good cash flow right now. Deferring the payment is going to help you survive. But there is some people right now that probably can't afford their mortgage payments and may not have considered the extra costs that are going to be incurred because of the interest that's now accumulated for the non-deferral payment, so for deferring that payment. So as an example, on a $300,000 mortgage, 2.75%, if we're looking at deferring it for a period of 6 months, that extra interest could be in that $20,000 to $22,000 range, which is a number that some people may not have considered. So I'd just say that if you can afford it, you probably want to keep paying it. And if you can't afford it, it's a no-brainer. You just defer.
Yeah, with such a small percentage, it just adds up pretty quickly. So you definitely got it right there. Corey, what would you suggest on managing cash flow right now with uncertainty in front of us?
Well, ideally, people want to have a 3 to 6 months set aside in savings that would correspond with the amount that they would need to be paying for their debt obligations, living standards, etc. So, if you're in that situation where you don't have that option to have 3 to 6 months set aside, then you would need to start to look at what credit do I have available, what savings have I have outside of my bank account. You need to kind of do a little bit of damage control there as to what your options are. You need to examine some of the new government benefits that are offered and just work your way, through it in that regard. As Shawn mentioned earlier, the mortgage deferral option might have to be, one of those things to consider just to help with cash flow.
No, that's wonderful advice. Thank you for that. Brian, if someone was going to make a withdrawal from their investments portfolio, what would your advice be to them?
Well, my advice would be that you would want to take it from something that was going to have the least amount of impact. And the least amount of impact, knowing that equities have been hit pretty hard by what's been happening with the market over the last month or so, then you would want to take it from a fixed income investment, preferably something like a money market.
Nice. The less losses, the better. What about someone with a RIF? If they took money away out of their RIF, should they rebalance the portfolio as well?
No, I wouldn't recommend rebalancing. The only thing that we have done with regards to our LIF and RIF clients is we've made sure that any withdrawals for income that are coming out are going to be coming out of a fixed income investment, something like a money market, so that the impact on their portfolio will be much less and the equities will be left alone so that they can rebound when the markets come back.
No, that's perfect advice. I really appreciate that. Shawn, if someone has an insurance policy and is worried about paying the premiums, what options do they have?
That's another good question, Ben. I know that everyone's trying to shore up their cash flows right now. We're going to be limited on some of those options. So if someone has a whole life policy or a permanent policy that has some cash value, most likely if the policy's been set up for some time, they'll be able to go inside the policy and pay some of those premiums with some of the cash value that's being built up. So that's going to be helpful for sure in some situations. For someone with a term insurance policy, it becomes a little bit more difficult only because those premiums are set. And If we're not able to pay those payments, my first go-to might be, do you have an emergency account that you can go to for cash funds? If not, do you have a line of credit that you can borrow against to pay the premiums? Because it might be a benefit to keep that policy in place as opposed to canceling it and not having the proper insurance coverage. If we're running out of options, we can always look at potentially lowering the amount of the death benefits. So an example, if we had $1 million term insurance policy where we're paying $100 a month, we potentially could lower the death benefit of the policy in this example by half, which would theoretically lower the premium by half. And the last thing we should know is that most large insurance companies allow the premium to not be paid for a period of up to 30 days. So if we had a policy that was owing money on April 1st and we couldn't afford to pay the premium, that technically that policy was still going to be in force until the end of April, at which time we would owe that, or the policy would collapse. That would be my options there for you, Ben.
And if someone's 10-year or 20-year policy was coming to an end, what should they be reviewing inside their coverage?
Yeah, I think it's a great time, especially as we're going through this crisis right now. It's a great time for everyone to really take stock, and those people you just mentioned as an example of the proper insurance coverage they need. So, do we have enough? Is there any gaps in my current coverages? And I think some things that we need to consider are things like that are most common would be your debts. So people usually look at life insurance as a way to pay back debt, whether it be your mortgage, it could be business debt, but a lot of times it's very personal. So there's a gifting element that's involved as well. How much do you want to leave your kids? How much do you want to leave your spouse? Do you want to gift to your family? And is there any community charities that are important to you? And sometimes we obviously use it for tax mitigation purposes. But I think now's a really great time to step back, look and evaluate what your insurance needs are, because a lot of the insurance companies right now are being very, very cooperative in allowing the underwriting process to continue and get those insurance to people who really need it.
No, that's wonderful. Brian, with the mortality rate unfortunately rising a little bit, what do you think what is the risk for not having a proper filled out will?
Well, I think first off, we're being told that the mortality rate is not going to rise as a result of this pandemic. It's probably not going to be significant enough that would, or prolonged enough to make any major change to mortality tables. However, if they don't have a will, then they run the risk of dying in what they call intestate. And if you die intestate, then you may not have things go where you would like them to go. It's going to be dictated by law in terms of where things go. And the last thing, Ben, is that's why we stress to clients that it's really important that they have a named beneficiary and a secondary beneficiary on their policies, both investments and insurance, because of the fact that will circumvent the estate, that will bypass the estate and go directly to those individuals that they wanted the money, that they wanted to receive the money.
Okay, perfect. Yeah. What do you think? Is there a very big risk of someone not having anyone on their will? What would happen to that money?
If they were not on the will?
Yeah.
Well, if it goes through intestate, then there's rules. So in the province of Ontario, for example, there are rules that stipulate that spouses have rights, children have rights, etc. And really, you open it up that anyone can come out of the woodwork and say, well, Ben promised that if anything ever happened to him, I was supposed to get blah, 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 and contest the will. So you have to be very careful by, not having a will that you risk running that scenario.
Perfect. No, that makes 100% sense to me. Corey, why would one want to buy into the market right now?
Well, I think, the opportunity that is available now in the market, I don't think anybody's naive to think that things are on sale right now. I think with all the fear that is out there, it, probably exaggerates things even more in terms of where we're going. And I think that if one had a time horizon of 18 to 24 months, one looking back at this point in time will realize that this was an incredible entry point into the stock market. I think it comes down to your risk tolerance and your time horizon as to, you know, where you're allocating money in your portfolio.
And where would you suggest to allocate your money into the portfolio? If you had, let's say I just did my taxes and got $1,000 extra, what would you say to do with it?
Well, from a financial planning aspect, I think you would want to be looking at, do I have any outstanding debt to be applying my refund to? If you weren't in a position where you had debt to pay down in this environment, you would probably want to be looking at some of the large cap, you know, blue chip dividend options that are out there. I think there's numerous ones that are on sale right now that would show great benefit in anyone's portfolio.
And how much lower do you think this market will get? Do you think now is a buy now time, or should people wait a month and see what happens? What is your suggestion there?
Well, if we had a crystal ball and we knew the answers to that, we would probably not be sitting here. So I think it becomes, you know, more of an exercise. Again, it comes back to your time horizon. And I think if you're able to look out, you know, a couple years out from now, then probably any entry point along the way is excellent. I think there's certainly potential for more volatility regardless as we move along here with so much uncertainty. And I think it would be a fool's game to think that the market is only going back up from here. So I think you have to be very diligent in how you deploy money into the market. And that would probably be the ideal, is to kind of do that. Maybe you do that on a weekly, bi-weekly basis to slowly move chips per se back in without having to take a big bet up front.
That's great advice. I'm going to turn to the people on Facebook right now because we are on Facebook Live. I just want to see if there's any questions that we can answer from anybody. I see there's a couple of people on here, and I just want to make sure that they are comfortable and they get their answers answered. While we kind of wait that in, if either you guys, Brian, Shawn, Corey, have any other statements that you guys want to reach out to the people and talk about, do it now while these people are asking questions.
Yeah, I think it's great. I like this format, and we're going to keep trying this. I think we have to reinvent things a little bit. We used to meet in the office, and this is a great way to keep the communication going. I think we're all going through this time of worry, including ourselves, right? No one's ever gone through this, and it's certainly people that we're working with right now. So we're just trying to, understand what's going on, keep the communication out, understand each personal and business concerns, and provide great advice. But even for myself, I know there's a great deal of, I don't know, how's this going to affect my kids? How's this going to affect my family, our mobility? When do we get to go camping next? There's a lot going on right now, and I just think it's important that everybody just take a moment and remind yourself how lucky we are and very fortunate we are. Some people don't get these opportunities, so we gotta sit back and drill down and be mindful of where we're at right now.
Yeah, and I think the other thing that we want to pass on to our clients and any potential clients is the fact that we're here. We're not hiding someplace. We're here. We're available. We want to have a dialogue with our clients. We want to be available to answer their questions. Although we're all hunkering down at home, we are still available, be it by email or phone. So, don't hesitate to contact us if you have questions or concerns, because we'd be more than happy to answer your questions and concerns.
I got a question coming in there. I see from Ken. Did you see that, Ben?
No, I haven't. Oh, how would you recommend rebalancing a portfolio at this time if there is no intent to retire within the next 5 years? Oh, Ken, that's a really great question. Thank you for asking.
So I think, great question. Who do you want to answer that, Ben?
Corey, do you want to take a shot at this? And then if Shawn and
Yeah, we can just go round table on that. I think, as Brian alluded to earlier, rebalancing your portfolio, if you have a long time horizon, might not be necessary. And I think that the answer might also lie in whether it is registered or non-registered money as well. I think if you had non-registered money, there's definitely a valued argument that taking some capital losses right now could be beneficial, with the assumption that the market, will rally at some point in the future.
Shawn, do you have anything to add to that?
Yeah, I would agree with that. So I think that there's been, depending on your setup of your portfolio, there's times when there's opportunities. If you're in some way, if I look at a majority of our clients, we've spent the last couple of years talking a little bit about risk in the marketplace. And if we've taken some of that risk back, sometimes if we look at time frame, there may be opportunities to push some risk back in a thoughtful way. If someone's outside of 5 years and they've done a good job at the allocation side, then I would agree there's probably no need to make any changes. But right now, it's just a matter of, is there opportunity? Is the client wanting to look for those opportunities? And if not, if it's just damage control, then really, I don't think allocation has to be a concern right now if we're outside that 5-year time frame.
Excellent. Great, Shawn. And Mr. Adams, do you have anything to add to that?
Yeah, the only other thing I'd add, Ben, is that, one of the things that people seem to think is that, I can pull out of a market and then I can jump back into a market. But what they forget, and what we've learned over time, is the fact that market timing is a very dangerous game to play. And it's a very slippery slope. When is the right time to come back in? If you come back in too early, too late, it has a big effect. And, the problem is that people will leave a market, and then unless you're paying attention or what to look for, the chances are you're going to miss it. And when you miss it, it's big. Like the boat's already sailed and you've missed it. So it's really important that you don't play games with your portfolio. The tried and true is terrible as it sounds, is to stay invested, and the market will come back and you will regain what you've probably lost during this downturn period.
I think there's the value that, if you're adding money into your portfolio, if you're doing a monthly contribution, I think you have to just think about this as dollar cost averaging. And I don't think you go the other way and be fearful of allocating to one's portfolio or savings plan. I think, the opportunity to buy things dramatically on sale right now is in front of us. And so if you're in that position where you don't need to stop your contributions and you can maintain, or you have extra cash that's not needed on the sidelines, I think a conservative deployment of that cash into the portfolio will show great returns down the road here.
I would totally agree with that too. And I think a lot of people are curious where this is going to go in the next 24 months. And I don't think we have any idea, but I can, for me, the part that believes and wants to really believe in the capital markets is going to believe that in 3 years plus, are we going to be in a better place than we are today? And I think most of us are going to believe that we are. So if we go in now, what Corey's saying is very true. We go in now, we're probably going to see some great discounts and have great results down the road for it.
Yeah, definitely dollar cost averaging is a tried and true method of investment. And it's shown time over time that it will prove good results. So that wouldn't change, particularly during a time like this where you've got markets moving considerably. So that by dollar cost average, you're going to take advantage of some of those lows and it will enable you to gain.
Yeah, Ben, there's a question there coming in from Doug. Do you see that question?
Yeah, I'm on it right now. Doug, you definitely have not missed this, but he asked, are we able to add money to our plans now?
Absolutely.
Yeah, no problem. So the office, I see the comment here, Doug. The office is not closed. We've just been working remotely. So we've set up a remote office under the instructions of the provincial and federal governments, and been working very well. Fully functional. Just we're all all working from our homes, but we do our staff meetings every day in the mornings, and we have full days. So absolutely no problem at all. No problem at all to do that. All you have to do is get in touch, and you can either email us, reach out. If you don't have the email, just reach out to us and we can get it to you. But be happy to set that up, and we're fully functional. And now would be a great time to start that conversation.
I think the element for people of having to embrace technology has been like never before.
Yeah,
so,
including ourselves.
Yeah. How to do these Zoom meetings and go-to meetings and FaceTime. And I think, for a lot of us, it's a very, I know there's an individual who has a little bit more gray hair than the rest of us in this group. And I know that the embracing of technology has been really challenging for everybody, right? And so I think as clients, as prospects, as somebody that you want to reach out to us, don't worry. We'll figure out how to communicate with you that best suits you. And don't be intimidated by, well, I can only correspond by email. Well, at the end of the day, if we have to courier documents to you, we will courier documents to you. We'll get it done, even though things are not the norm right now.
Yeah, I would agree.
And that's a good segue into the fact that one of the investments that, and actually it's contained in a lot of the investments that we have in our portfolios, but one of the investments is science and technology. And this proves to me, certainly as a baby boomer, that science and technology is not going away. And science and technology is going to only grow. And that's the one thing this pandemic has proven to us, is the fact that we need science and technology. If we don't have that, we've got a problem. Because, I suspect this isn't going to be the only issue or problem we're ever going to have going forward. So we're going to need to be able to have the ability to communicate with each other, and we're going to have to have the ability to be able to solve scientific problems with answers.
I agree with that, and I think there's a lot to be said about the ability of technology to help us in this recovery. And I was using this with Corey, and I were chatting the other day about this, comparing this to the Spanish flu and what they went through and what we're potentially going through. And I think right now, what's going to get us out of this is going to be our technology, and that will certainly encourage and move us along in a swift way. I mean, if you look 100 years ago, if we use the Depression as an example, or use a Spanish flu as an example, that was a period of time when the businesses just shut down. You went home and you could not function. And here, for the most part, even though there's going to be some sectors which are very damaged for a short period of time, there's a lot of businesses that are going to be able to have success and succeed and grow during a really shifting period of time, and because of technology. So that, in a lot of ways, bodes well for us. And I think it's a good news story.
Absolutely. I think that we spent, for the people that have been around for, outside of the millennial generation, that, we remember that tech crash. We remember when the internet first came to light and how scary this all was, and the exposure that we had with the Nortels and the JDS of the world. And things have definitely changed a lot since then. And I think, when you look at how you communicate, what are those devices that you're using? How are you interacting on your computer? Are you using the Microsofts of the world? How are you making your purchases online? You're probably using a credit card. So do you, would a Visa, would a MasterCard be in your portfolio? The institutions that you bank with, would those be in your portfolio? We looked at an article yesterday that talked about that Microsoft has almost an 600% surge in cloud storage. Like that's like unheard of for that to go on in a 30-day period. And I think all these things speak to, society is still moving along, even though we're scared and we're, self-isolating and trying to flatten the curve. But we're still spending, we're still going to the grocery store, we're still paying our bills for most of us that, and we know that there are lots of individuals out there that are going through trying times with, whether you've had a recent layoff, and, that's kind of, we're just trying to help calm those waters. You don't need to be a client of ours to communicate with us. You can reach out to us. We're happy to engage and have a conversation. So again, there's no really stupid question, and we don't have a crystal ball, and we use a diversified approach to try to, attain those goals that you have. And some of the mitigation tools that we utilize can help, dampen some of that, or strengthen the pain that, you're feeling, and we might be able to help you, deal with that going forward.
Corey, you touched on something that we've been talking about fairly often. The government has put in some places for people that maybe have got laid off that can apply for special EI, stuff like that. Do you want to touch on that real quick before we go?
Sure. I think all of us can chime in on this one, because it's kind of been a moving target, and we've seen, they've removed some waiting periods for EI. They've introduced a new benefit for people that don't qualify for EI. We've seen an increase in the child tax benefit. So we've seen a bunch of those programs come to light. We're seeing, Shawn can speak to some of the wage subsidy that's available out there now. I think the other thing that's happened is we're getting media to death right now. And I think we're seeing our screens so much, whether it's our computer, whether it's our phone, our iPad, or whatever the tools you're using, and then lo and behold, you're sitting down and watching TV at night. And so I think a lot of people in society are getting very numb to the news right now. And I know from my own experience of speaking with people, and not everybody is aware of the programs that are out there. And that's again why we kind of echo that, if you're challenged, if you have things going on in your life, like, please reach out to us.
Agreed.
Yes, speaking as a baby boomer, I can attest to the fact that this isn't the only crisis, the only issues we've had in the last 70 years. So, it's, the sky isn't falling, Chicken Little. It's, we need to remember there will be a tomorrow, and that markets will come back. We will be able to go outside and communicate with our fellow human beings once again at some point. We just have to hang tough, stay safe, and be there for one another.
Good point, Brian.
Awesome. How should we log off now and say goodbye to our friends?
Yeah, it's great. Thanks, Ben, for organizing this. This is fantastic.
Thanks for joining us.
Thanks, everyone.
Yeah, I want to say everyone, and just a little plug for ourselves that the Mind and Money Show podcast featuring Brian Adams and Doreen Todd is coming out tomorrow if you guys are looking for something to do.
Awesome. Thanks a lot, guys. Take care.
See you.
All right.